Hi there. What happened to Tilray brands? Because as you can see, the stock price went up 70% in just a few days and then down over 30%, almost 40%. Maybe you remember my past videos when I said that the stock price will go up in the short term and then it will go down, as always happens, because this is based on news. What matters, if you really want to invest in this company, what matters is the business. If the business is doing great in the future, then you'll make money. The stock price will go up. That's why you have to predict their future numbers. What TLRY brands will deliver in the future, what their revenue will look like, and their earnings, if they can become profitable. So, in this chart, you can see the analyst estimates. As you can see, the revenue is expected to grow from 600 million for 2023 to more than 1 billion by 2028, 1.3 billion. And their earnings, as you probably see, are expected to be down for the next 3 years and then to improve a little. So the market expects that Tilray brands will become profitable in the future. Now, this is what the market expects, what the analysts expect. If you can trust them, then you can try to value this business based on those numbers. As you can see here at the end, you have my valuation. Now, if you don't trust the analyst estimates, what the market expects, then you can make your own estimates. Maybe you believe that this company Tilray will make over 600 million in the next 5 years. And then the market cap can go to 5 billion from the current level of 1.3 billion. But if you don't know how to make your own estimates, better look at what the market expects, the analysts. So the analyst expects this business to become profitable and to deliver about 60 million in earnings in the next 5 years. So this is what the market expects. Now, besides this, those estimates, you also have to look at their opportunities, as you can see here, and the risks. Because sometimes you might believe that Tilray will go up a lot in the future, they will make a lot of money and in profits based on their opportunities, but sometimes it may never happen. And these risks may become true, such as dilution, not becoming profitable, and of course bankruptcy. So let's take it one by one. As you probably know, this company, Tilray Brands, has good tailwinds from the cannabis industry, which is expected to grow, to deliver, better said, a compound annual growth rate of 44% a year, from 2023 to 2030. That's amazing. So if you access this link, you can see that the total market size will grow from 57 billion to over 444 billion. You can see here. And this is quite amazing. If Tilray can gain more market share in the future, then you can be sure that they'll become profitable in the next 5 to 10 years. Now, this is not all. Maybe you know that Tilray not only sells cannabis in Canada, in Europe, medical cannabis, but they also sell cannabis for adult use. They also have beverage alcohol in the US, wellness, and a distribution system in Europe and Argentina. So this company is well diversified. They sell cannabis for medical use and adult use, beverage, and wellness products. And this is great because we have more streams of income. Now, the next opportunity is international expansion. As you can see, or as you already know, that Tilray has a leading position in Canada with a market share about 11%. So they are the leader in Canada. Moreover, Tilray is focused on growing its market share in medical cannabis across Europe and other international markets. This means that this line of business, medical cannabis, will grow more in the future because they will expand in Canada and other markets. Plus, besides the US, where they sell beverage and other wellness products, they also might enter the medical cannabis industry. As you can see here, they don't make any money from any cannabis operations in the US. But the rescheduling of cannabis may open new opportunities, so that Tilray can distribute medical cannabis in the US. And this can be another opportunity for Tilray. Not only their beverage alcohol in the US, they may also sell medical cannabis, different products. And of course, if cannabis becomes legal in the US for adult use here, then Tilray is well positioned to take advantage because they already have some brands there, THC infused products, and also those beverage and wellness products, and they have the stores, the distribution, and they can take advantage if cannabis for adult use becomes legal in the US. So their opportunities are quite high. Of course, if they also make other acquisitions, as they did in Canada with Hexo and Trust Beverage, then Tilray can expand in other markets. I mean, their market share can grow even more in the future. Maybe Tilray may do other acquisitions in Canada, the US, and Europe for medical cannabis, beverage in the US, and Canada, adult use and medical cannabis. So they have a lot of opportunities to grow the business, to increase their revenue. But as I said, what matters at the end are their profits, if they can become profitable and keep growing their earnings more in the future. The market, the analysts expect some profits by 2027 and 2028 of about 50 to 60 million. But if that doesn't happen, then you have to be aware of the risk. As I said, Tilray has low margins. You can easily see from their income statement. They have huge losses, over 1 billion in 2023 and over 600 million in 2020. And of course, the first risk, which I don't like about this business, is dilution. If you look at the total number of shares for Tilray, you can see that it has increased from 260 million from 2021, as you can see down here, to over 750 million in 2024. So this is a huge dilution. Investors who bought in 2021 this company has lost more than half of their money, more than 50%. And you can easily see the performance of the stock price. 2021, the stock price was about $30 per share, and now a decline over 94%. And this happened because of their huge losses for 2023, over 1 billion, and of course this massive dilution. Some people don't understand this dilution. Now, whether or not you want to pay attention to the risk and focus only on the reward, it's up to you. You decide what companies you want to invest in. So it's up to you. That's why you might trust the analyst estimates that this company will become profitable and the next 5 years they might make 60 million in earnings, and that happens. You have 3 scenarios: the bad one, the great one, and the normal case. For instance, let's start with the normal case. If Tilray makes about 60 million in earnings, of course, they might make more than that, 100 million in earnings. But let's say what the market expects, 60 million in earnings by 2028. If that happens, then the fair value per share will be around 98 cents, almost $1. And now the stock price is about $1.7. Or better look at the market cap. Now the market cap is about 1.3 billion and the fair value would be about 700 million for a 10% annual return. But this return can happen only if Tilray becomes profitable and they deliver about 60 million in earnings. Of course, if Tilray grows more than that, and they have a higher growth rate in the future, then the fair value per share may be about 1.1 billion. And now the market cap is about 1.3 billion. Or if you want the fair value per share, you can look here. Fair value per share, $1.4. Almost 1.5. So even at the current level, the stock price is overvalued. Despite this massive decline of 40%, almost 40% in just a few days. Tilray is still overvalued, based on the analyst estimates, of course, if you can trust these estimates. If you believe that Tilray can make more money in the future, then you can change the values. Instead of 60 million, you might expect 600 million. And then the fair value per share might be around $14. Or the market cap can go to 11 billion. So you can have a 10x on this investment, Tilray, if Tilray makes 600 million in earnings. That can happen. And of course, they maintain the growth rate over 10%. So it's up to you. You decide what you expect from this company. That's why you always have to focus on the risk first. Because if this company doesn't become profitable, you can lose your money, a big part of your money, as it happened in the past. You can easily see their performance. For the last 5 years, let's say from 2021, from its latest peak, the stock price has declined by over 90%. And you don't want that. You don't want to lose all your money. You want to have a return like this, over 300%. That's why you have to focus on the risk first and find those investments when the fair value is higher than the market cap, or the fair value per share is higher than the stock price, the current stock price. So as you can see, based on the best scenario, the market cap is still overvalued. The fair value may be about 500 million. So you can have another decline of 50% from this investment. But as I said, you decide whether you can trust the analyst estimates, what the market expects, or you make your own estimates, or you focus on the risk first, you see this dilution, not becoming profitable and in bankruptcy, and avoid this company. So it's up to you. You decide if you focus only on the reward and forget about the risk. So that's it for this video. And if you have other questions about this company, Tilray Brands, because as you can see, they have many brands, you can ask me in the comments.